So we're going to start with L'Oreal, which I know that you know well.
Yep.
It's a
So
French
let's dive into that
cosmetics
one
and
first.
consumer products group.
Exactly.
And it focuses on hair and skin products.
Indeed. So this is the largest unique player in the market. It's got a market value of over $100 billion. So that puts it in perspective. Headquartered though in Paris, founded by a Frenchman.
PE here is 16.9 and a dividend yield of 1.6.
Yeah, so let me
First
talk
of all, your
about
clients are invested in this space.
Yeah, so we've got this one in our international portfolios. I often talk about it because it's a pure play focus on this particular sector. The fact that it's European is interesting. Its sales are roughly a third into the European market, which, as you know, has been a bit of a tough market for consumers. Talking about its global competitors, I mentioned Procter & Gamble and Unilever. Leave those ones aside. The other obvious pure play on a global level into this sector would be Estee Lauder, which is about a third of the size and very much more oriented towards the United States of America.
What is it about L'Oreal that makes you so enthusiastic and such a long-time believer in the stock?
Well, you know, you can't own everything, and to some extent you've got to pick and choose, and we picked this one, so that's why I'm always going on about it. It's got a big emerging market footprint as well, so it's got a solid exposure to Latin America, which is a very, very big and important market for the cosmetics industry, particularly Brazil. I'm not quite sure why, but Brazilian men and women are particularly fashion conscious. They spend a lot of money on hair care products and a lot of money generally on cosmetics. The other interesting thing about L'Oreal is it's got a very mid-market strength. So Estee Lauder's products are much more expensive in general. L'Oreal and Maybelline is very strong in lipsticks, very strong in hair care, very strong in basic makeup products. As you will know,
downside risk to the story here?
Not really any, to be perfectly honest. Europe is recovering. This is a company that's got fabulous brands. It's done a lot of work on research and development. It's got brands at the top end. Let it be known that there certainly are cosmetics brands that are expensive, Urban Decay, stuff like this, niche type of stuff that they're bringing out. But just generally, as people get richer, they tend to spend more on this category. And we know that it happens across the board, and it's men and women increasingly, and it's very brand conscious. People like to get into using a particular product and then they'll use it again and again.
We know that you are hot on the story. Shall we just reinforce
Well, look,
that?
do we have a share chart?
Oh, there we go.
Oh, there we go. That's nice. So that's an interesting looking picture. That's over 5 years, and you can see that's the L'Oreal American Depository
Where
receipt.
did you buy in? Can you remember?
We've owned these at all sorts of levels, but most of them being bought in that sort of $20, $30 level.
So it has done well for you.
It has done well. 2013, 2014, it sort of went nowhere. The interesting thing about the lift towards the end there is part of that has to do with the strengthening of the euro compared to the dollar and dollar compared to the euro. There's always that going on. But I do try to ignore those currency trends when assessing shares.
It's too difficult to
It's got a great
trends.
CEO. It's really positioning itself to grow globally. It's going great guns. It's just a fabulous
And you're not too
multinational
concerned about
corporation.
that downturn? Is that just market related?
Indeed it is. You know, it's just the kind of ebb and flow. We know that
Just
the
a
market,
tiny
little
little
bit of a
drop-off
tiny
that we're
softening
seeing.
from 40 back to 37. Just one other point to make about them, because they're headquartered in France. France, as you know, is like a country that is very fond of taxes. And one of the problems is that they tax dividends quite highly. So remember, don't buy stocks like these for their dividend yield, because the French government grabs 35% of your dividend, which is a bit distressing.
It is a little distressing.
But that's just the way it goes. And, you know, the companies are aware of this. So what they tend to do is use more of their free cash to do buybacks and to expand globally and do acquisitions and mergers and that sort of thing. They don't typically get into too much of the dividend distribution mode, so you don't again then get hit too badly by the taxes.
As you being a stickler for the format of the show today, hot or not?
Hot for me, yes. I do like this one. I think it's something that you could consider owning. And of course, you might also want to own some of those other groups that have this as a part business, but for me, this is certainly a hot one and a definite plus for a portfolio.